Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, June 17th, 2013. And this is brought to you by my service called Triton Wave Consulting, which represent the Triton Waves, the early warning market timing indicators that can be used in all time frames in all markets. All right, I want to start off by wishing all you dads out there a very, very happy Father's Day. I hope you cranked out the barbecues and had some great fun, and honor your fathers as well and your children as well. Let's take a look at the S&Ps here on the left-hand chart. This is the daily. If I move this out, you can see that once again T1 has gone below zero. Let me get a pointer out for you. The T1 has gone below zero right here about 5 days ago at the beginning of the week, right here, and as it normally happens, after it goes down a little bit, comes back up to hit the 8 or 21 period exponential moving average, and it did just that, and we're sitting practically right there. Okay, but what's even more important is the T2 moved below zero right here 3 days ago. So what's the significance of that? The significance is that even though T1 in this area moved down below zero back in April, T2 was still above and T3 was still above. So it's still not confirmed downside, but let's move out a little bit and we can see that this is the first time T2 has gone below zero in any respect since it cleared the upside right here back in December, beginning of January. I think it was like January 7th or something like that. So T2 all above zero, went down about 4 days ago, back on Tuesday or Wednesday, and it moved from 1444 up to almost 17,000. I mean 1700, sorry. So 16, I think 1680s. And now it's moving down. Okay, so the question is it going to move? Let me expand this out a little bit so we can see it a little bit better. This is a 144 daytime chart right here on the right-hand side. Let me just, you can see that right about the time that this went down here at the beginning of last week, it did the same thing on T1, also T2, T3, and T4, and right at the close on Friday, the last two hash marks of 144, which means it's 144 minutes. So there's only 3 in a day. The last 2 were down below zero. First time since December. I think that, let me make sure here. That is January 4th. So it gapped up. It gapped up January 4th right there. So let's use the 144 for a fib retracement here. Actually, let me see. It goes back here. We'll use the daily. I'll stretch this out and just take over you can see the daily and the 144 match anyway. So let's take the daily. We'll take a fib retracement from even just the last move right here from January, from when it went up. I'm sorry, from when it went above zero for the first time on T3, on T2. So we'll take that, and we could go back to this area right here, but we're going to take the part that went above zero, and we look at it here, and blow this up a little bit. We can see that the 50%, let me see, is that 50? Okay, the 50% right here is 1535, and the 618 is right at 1500. Okay, so I'm looking at this and I'm thinking, the 50% is not going to hold. Even I mean, it actually may bounce off of here because this is a low. This is a low of on April 18th, right in here. But since this is the first move down here the entire year, then I think it's going to hit the 233 right here on the yellow. The yellow mark is the 618 retracement, and it's also the 233 exponential moving average, which is similar to what the industry uses at 200 EMA. So that's what I'm looking for right here. 1500. We are talking about a 122-point move on the S&Ps. And before you have coffee one morning, you may wake up and see this down 20 to 30 to 40 points, and then you're going to just like crap. So I'm telling you, probably for the 150th time, don't let your 401ks become 201ks, and then you won't know what to do in a panic. Okay, as far as paying the daily shots on this, the day trading for day traders, it's really pretty clear. You see this dark brown line here went below 0, above 0, below 0. So let's see what happened on the price. This is a wave. This is T4 on the S&Ps, E-mini futures. It went down here, boom, crossed right here, up here. You're never gonna catch this bottom unless you're using like a 144 tick chart, and then you're gonna get sloshed around in and out and in and out and stopped out. So better to take a little bit longer perspective. But you can play the very short ones like the 610 tick chart or the 377 tick chart, as long as you keep something like this. Don't play the upside when it's down like this. Don't play the downside when it's up like this, and don't play the upside when it's down like this. Just make sure to use this T4 right across here as an anchor for when you're playing very small moves. All right, so this came down here at about 1628, and now it's 16. It finished at 1618. It's right now up 375. This kind of like the pause that refreshes overnight because no one wants to believe that it's going to go down, but believe me, it's going down. All right, let's move on. Okay, our friends at Apple. Apple, I love Apple. Told you that time and again. I have their products. But when you hear stories about, like fundamentally that they're coming up with their conference this week netted no more confidence. Conference netted no more confidence than was previously thought. So they ran it up like 3 or 4 points, and then it ran it down like 10 or 15. You can see the crosses on the S&P, S&P. The crosses right in here and right in here. Now, you would think that with all this activity, up, up, and up on waves 1, 2, and 3 on the daily, that this really, in the old days, when something like that happened back here or back here, you'd get these like straight shots up. You'd get these moon shots of 100, 200, 300 points. Above here, 300 points, 200 points. Here, it goes up on T1, T2, T3, and what is it doing? And what is it doing here? Sideways, flat to down. Not a good sign. That means these waves, even though they're in sync with like a wave movement, there is no price action that will support the wave above 0. So the waves that I'm looking at are deep below 0, T4, T5. All right, let's move to a 21-minute chart here. I want to move back to, whoops. I forgot to mention something. There were a tremendous amount of puts and calls, open interest at 4:30. So that's why it ended at 4:30:05. If it weren't for the puts and calls on Friday and the short interest and the weekly expiration, this would have ended up at 4:20. It started down and then it came back up and it held there just to satisfy all the options players and the thousands of I don't know, there were like 40, 50,000 contracts out there between the puts and the calls on the 430s. So I am looking for Apple to just keep on going. The 8 on the daily, this is all daily. The 8 and the 21 have crossed, bing, right here. But not only have they crossed, but they've crossed the, let me make that more clear one more time. Okay, here's the 55. All right, if the 8 and the 21 cross by themselves, but they haven't crossed the, like here, if they haven't crossed the 55, it really, it's just like a small undulating move. But when they cross each other and at the same time cross the 55, that is really, it's a death roll. So I'm looking for Apple at 397, and that's just the first bounce. That's not my ultimate goal on that, but you'll have to stay tuned for the ultimate goal. It might be 324. Let's take a look. Okay, so on the weekly, it looks like 384, the same thing. But on the weekly, the next moving average comes down to 306. Very, very possible. Everybody thinks it's Apple's going to like 1,000. Well, actually, it already is 1,000, and I'll tell you why. See this? 2 for 1, 2 for 1. Okay, so when it reached 740, let's just call it 750 back in July last year. Let's take 750 times 4, which is 750, 1,500, 3,000. So this is actually, without the splits, it's a $3,000 stock. So everybody who thought it was going to 750 has already gotten 3,000. They just forgot that it's been up there. All right. As far as day trading Apple goes, let's look at the 987. I think that's what I was looking at. Here's some really, really nice moves on Apple on here. If we just follow T2, T1 is kind of too iffy because it kind of blips up in different places, stops you out. So you have to look historically for the smooth connections. Right here, bing, 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 very clear, very concise. And what you get is right here, down, right here, up. Now you can count the number of points. It's like 15 to 20 points each time. Sometimes they're 30 points. This one here is a 30-point move down to right about here. You're not going to catch these bottom ones, so just forget about it. Don't get too neurotic. You're not going to catch every penny here. Down to here. You would have had a little bit of trouble in here, but you would have caught this. Down to here and down to here. And we're still below 0. So if you've been doing this, congratulations, good luck. You're lining your pocket. You can go out and buy some more Apple. All right. Okay, so I'm going to look at a few really quickly and then call it a night. I'm looking at the 21 cash on Google, and we're looking at T1 is a little bit iffy. You can follow these, but sometimes they move up too quickly. They jackknife up on T1 here and here and here, and you're really not catching the moves. So you have to go to a smaller one. A longer one, like right here in April, on April 19th approximately. This goes above zero, stays above zero the whole time. You're in it, you know, you don't even have to watch the market. Bing, 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 all the way up. This is a 120 point move. Comes down, you get out. This is a 80 point move. Moves up, bing, 50, 60 point move. Okay, so right now, the short guy is below zero on T1. It goes down, but if you're thinking of buying puts or shorting this against the T4, which is above zero, then the idea is that you have to know that it's a counter trend trade and just wait for this to be definitively one way or the other. So you're not going for big points like here or here, which are trend trade moves, which are moves with the market in a trend. If you're and this one was a trend trade move. This is a counter trend move. If you want to take it, that's fine. You have to know that there are smaller points. You're not going for a grand slam. You're going for a single. Okay, 21 minute on Tesla. Everybody loves Tesla lately. Let's look in the moves in the past that T1 has shown on Tesla. Very clean, dramatic moves here. Right here, T2, T3, bing, bing, and this is when it was 38 to 35, so not a lot of point movement. So let's get to where the big points are and move the map over here and what's going on right now, and these are much bigger moves. Okay, so T1 below zero, do we take it? Absolutely not, because T4 and T5 are above zero. You just do not take it. You wait, you wait, you wait, not for this one because it's kind of blippy, and you wait for the rule of thumb is when you get these little short-term hiatus over the top, down below, down over and above zero in a too short a time frame, then you want to wait for T2 to kick in on the 21, and here it kicks in at about 80, right about 90, and shoots up to 107. Okay, do you want to take this one? No, because this is above zero. Do you want to take this one? Yes. It didn't net you very much. You took a little bit of heat for two or 3 points, and you got like 6 or 7 points out of it. Do you want to take this one? No, because this is still above zero. Okay, this one's a little bit iffy because this is now above and below zero. So it's not a good one. This is now above zero on T4 as well as 1, 2, and 3. So this might actually be an okay move here. We'll have to wait and see what happens, but this may be good for 6 or 7 points to the upside. It may come up and try to hit the old high. Right now, as I'm saying this, the overnight S&Ps are up 525, and gold is up 90 cents. Let's look at some of these. Let's look at some of these crosses here. Ba-ding. All right, the Aussie dollar that's been coming down. Let me move this over so you can. Whoops, wrong one. That's right. Hang on, my computer's messing up here. Hang on 1 second. I always forget when I have my drawing tool on, then I can't move the pages across. Okay, so this is what happened on Friday on the Aussie dollar. You know, like basically the rule of thumb that I've been telling you for a long time is Aussie dollar goes up, risk on, risk off, risk on, risk off. You can parallel this to what's going on in the stock market. This is Friday's action. And this was, this is today, right here. This little blip right here is today as of Sunday. It's 7 o'clock in the evening, Central Time. And let's look at the dollar against the yen. The dollar is up against the yen. Euro is heading down. So this is another sign. Euro goes down, the stock market's going down. Okay, but if the yen is going up, the stock market is going down. And look at this incredible move up. I don't know if you can see the yellow against this move, but that is, okay, so if you look here, this is taking out all the moves to the low side. So Abenomics, an infusion of capital into the system that was 50% greater than what Bernanke did in the United States. This is what happened in the yen. This is a daily thing. The stock market of Japan, the Nikkei, went up like this, and then everybody started to figure out, well, maybe it's not working, and the yen started coming up, and their stock market started coming down. So it was up like 4,000 points, now it's down 3,000. So it's, you can see kind of what's going on. The dollar, let's look at the dollar index. Our dollar is coming down against all these currencies. Now usually the rule of thumb is dollar goes down, market goes up. The dollar goes up, market goes down. So things are, best case scenario, they all work together, but you got to look at these individually because they don't always work together. They take off in their own, for some unknown reason, for whatever other investors are doing or moving the markets around. There's trillions of dollars being played in these forexes every single day. Okay, the last piece of news that I wanted to give you was last Monday after I made my last video. There were some numbers that came out of the EU. Actually, it wasn't specifically the EU, it was Italy. And it turns out that their GDP contracted at an annualized rate of 2.6 based on a quarterly report. Contract. Confirm that is a contraction, not an expansion. Okay, if you remember, about a month and a half ago, I remember all the hoopla and panic in the markets in the EU and the US when Greece, the riots were going on, and then they had to all these programs to restrict spending and everything. The name of the word, the word that actually describes it, it's lost to me right now. But anyway, the idea that I put across 2 months ago was that Greece, with all of its troubles and what the ECB was doing, and in concert with the German banks guaranteeing it because they're the biggest economy in Europe and obviously one of the largest in the world, was that the Greek debt was 580, maybe $600 billion, and everybody was making just incredible emotional and economic fuss over 500 to $600 billion. Okay, and then about 2 weeks later, I came out and some stuff that I read from economists from all over the world. The Italian debt is it's either I think it's 2.2 trillion. So it's like 7 times the Greek debt. So the fact that Italy is now contracting in the last quarter, which makes its annual rate of contraction 2.6%, is absolutely devastating. It is pivotal to what goes on and what is going to happen in the economy of Europe and the EU. That's all I have for tonight, and I wish you the rest of the holiday, rest of the Father's Day, this pleasant barbecues, and I'll see you at the next update. And just a reminder that I am Triton Wave Consulting, and these Triton waves are early warning market timing indicators used in every market, in all time frames in all markets. If you want to get a hold of me, you can email me at tritonwaveguy@gmail.com. Have a great evening.